It's time for the midweek check-in here on Stonkcast. NVDA just became the world's most valuable company. We got the market shaking off geopolitical tensions, President Trump speaking at NATO, and Jerome Powell, aka Daddy Powell, testified on the Hill. We also got key economic data you need to be paying attention to the rest of this week. Stick around for all that and much more. Make sure to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back. It's time for the midweek check-in, and we have a lot to unpack. So first of all, if you listen to the market prep video that we put out on Sunday, the U.S. bombed Iran, which we covered, and everybody and their mom assumed that the markets were going to tank come Monday. Well, folks, that did not happen. The market can remain irrational longer than you can remain solvent. The markets have been on a tear. Let's do a quick check-in here. If we take a look at the heat map from Wednesday, it was kind of a mixed bag overall. I believe SPX, the S&P 500, literally finished at 0%. It was flat. You have the NASDAQ, which was up slightly, 0.2%. NVIDIA was the big winner on Wednesday, which we'll get to here in a little bit. But the rest of the market was kind of a mixed bag. Let's take a look at the S&P 500. Folks, this thing is nearing a new all-time high. We are above 6,000, closed Wednesday at 6,092. We got the all-time high at 61.47, and we are almost there. We are almost there, if you can believe that, from the April lows all the way down here at 48.35. We've had this insane recovery. Taking a look at the NASDAQ, same story. Actually, even better, the NASDAQ hit an all-time high on Wednesday. Unbelievable. Peaked at 22,329. Finished the day just under that at 22,237. So, folks, things are looking pretty crazy right now. Quick check-in on the VIX, which has obviously been coming off because of the market rally. One of the lowest closes that we've seen on the VIX really since back in early June, actually. So the VIX sitting at 16.76 right now on Wednesday. It was down just over 4%. So overall, market is looking incredible. Let's do a quick check-in here on Bitcoin. Bitcoin currently sitting 107 here at time of recording. And really, I mean, we talked about this on Sunday. A good gauge when the futures are not opened would be the crypto market as to where we're going to head. Obviously, we had the U.S. bombing Iran. The initial knee-jerk reaction to that was bearish. We had Bitcoin dip all the way down to 98, and now it is all the way up, again, at time of recording here, just over 107. And really, the all-time high up around 112 is definitely back in play. Just absolutely insane. And one of the companies that has been helping to really prop up the market, I would say it's been a broader market rally, but if there's one in particular, folks, it is NVIDIA. NVIDIA has been on a tear, was up over 4% on Wednesday, a new all-time high. From those April lows at 86, closed at 154.31. Incredible. This thing has just been ripping. If we take a look here at companiesmarketcap.com, it is now the most valuable company in the world with a market cap at $3.76 trillion with a T. That's right, with a T. Beating out Microsoft for the time being. You got Apple underneath that, sitting at just above 3 trillion. Amazon at 4, sitting at 2.2 trillion, and then Alphabet rounding out the top 5 there, just over 2 trillion in market cap. So NVIDIA is the new leader. This from CNBC: NVIDIA shares hit record as AI chip maker again becomes world's most valuable company. NVIDIA shares continue to rally on Wednesday and closed at a record as investors gain confidence that China export controls won't dampen the company's prospects in AI. The stock is up about 14% in June after jumping 24% last month and finished at an all-time high for the first time since January. So shares rose more than 4% on Wednesday, closed at record for the first time. The stock finished at 154.31, exceeding its prior close high of 149.43 on January 6th. NVIDIA is now worth $3.77 trillion, making it the largest company in the world by market cap, beating out Microsoft, as I mentioned, Apple, while NVIDIA remains the clear leader in graphics processing units, or GPUs, that are being used to build large language models and run AI workloads. The strength of this year's rally is surprising, given that the company has said it is locked out of the world's second biggest economy, that being China. In April, the Trump administration issued new rules that cut off sales of the company's H20 AI processor that had been developed to meet prior restrictions. So it's really, really impressive, because we've covered this here in previous episodes. When that news came out, NVIDIA lost billions of dollars in potential revenue because of the restrictions from the Trump administration when it comes to some of those chips that we didn't want to send over to China. And despite that, this thing continues to run. So you might be wondering, well, how much higher can this thing go before it pulls back? Obviously, if we get some kind of bearish headline, that could weigh on the stock. But one of the most amazing tools you can use to figure out, hey, how much further is this thing actually going to go? You can use something called a Fibonacci extension tool that can kind of point out where we may be seeing some additional highs. If you don't know about Fibonacci extensions, make sure to check them out, see a video on it on YouTube, read up on them. But they're just simply a way that you can kind of gauge when something is at an all-time high. What are some next levels you could be looking at, right? I think just initially looking at it, if we're looking at psychological levels, round numbers, right? 160 would be the next target. We're sitting at 154 right now. But as of right now, it doesn't really seem like anything is stopping NVIDIA. This thing just keeps ripping. So shout out to anybody who was able to play this today, intraday, a solid 4% gain on it. And as far as the RSI goes, from a technical standpoint, it is overbought, but things can remain overbought for quite a while. The RSI is currently sitting at 73 on it. So pretty high, and I'm pretty sure that is the highest it has been in the past year. So it could be due for a pullback here, but that doesn't necessarily mean it has to happen on Thursday or Friday. This thing could continue to rocket. So let's move on to our next piece here. Let's talk some geopolitics here. So we covered on Sunday's market prep video, obviously, the U.S. bombing Iran, historic moment in time. And really, we pretty much all expected, or at least I did, that the market was going to tank. And basically, the market shook that off, as I just showed you. We are closing in on a new all-time high. And basically, from what I've gathered, the main reason for that is just simply the fact that a lot of people are viewing this issue as over. And so we had President Trump that it basically came out and spoke at NATO on Wednesday, which we're going to cover here in a moment. But if you haven't been watching the news, just to catch you up, we bombed Iran. Iran, in a very odd move, told us they were going to be bombing us in Qatar, which is an odd move. If you want to, bomb somebody, you typically don't want to let them know you're going to do it. And so the U.S., President Trump, basically took that as a sign that this was, which he even said himself, a very weak response from Iran, and basically was, just them saying, hey, look, you attacked us. We're going to make our citizens, happy and say that we actually did something. But they gave the heads up to President Trump, hey, we're going to be bombing you, get your people out of there. And it was, again, a very soft attack. And then after that, basically what we have now is a ceasefire between Israel and Iran. And based off that news, the market has been obviously rocketing. So according to CNBC, Trump says U.S. and Iran will meet next week. So this is interesting. Trump announced that Israel and Iran agreed to a ceasefire early Tuesday. Early in the ceasefire, both Israel and Iran appeared to violate it by firing non-lethal rockets. Since those initial violations, the ceasefire appears to be holding. Airspace restrictions have been partially lifted over Israel, and commercial flights are resuming. U.S. stocks posted gains and oil prices fell Tuesday on investor optimism. The ceasefire will hold. An initial American intelligence assessment of U.S. strikes on Iran found that the strikes did not destroy core parts of Iran's nuclear program. The White House is mounting a campaign to convince the public the attacks, quote, obliterated Iran's nuclear capabilities. Again, this is just according to this particular CNBC article. And President Trump has not been too happy, as we saw in the NATO talk, about anyone coming out and saying that these attacks, these bombs that we dropped, were not effective in dismantling Iran's nuclear program. So, basically on Wednesday, I watched some of his talk. It was very entertaining, to say the least. This reporter here on this article put up, Trump just unleashed on journalists who published the contents of an initial intelligence report on the U.S. strikes on Iran's nuclear facilities. Quote, the report was not a complete report, is what he said. So you also have U.S. Defense Secretary Pete Hegseth, who is launching a leak investigation into that intelligence report. So somebody's lying. We don't know exactly who's lying yet, but basically at this point, all we know is that Trump will meet with Iran. We do have a ceasefire between Israel and Iran, which is a good thing, and things seem to be moving in the right direction there. So either the case is that we completely dismantled their nuclear program, or we didn't and someone's lying. So we don't exactly know what the case is just yet. Another article here, Trump downplays U.S. intelligence report on Iran strikes at NATO presser. President Donald Trump doubled down on his assertion that U.S. bomb strikes destroyed Iran's nuclear program. He criticized reporting on an initial U.S. intelligence report that suggested the bombings likely set Iran's nuclear program back by a few months, not years. So that was it. Basically, some people were saying, hey, look, this only set them back by a few months. And Trump was essentially saying, that's not true. We obliterated them. He said, quote, it's been obliterated, totally obliterated, is what he said at the NATO summit. So I guess we'll find out in due time. The truth always comes to the surface. But as of right now, that's where we stand. And this is part of the reason, if not the whole reason, why the markets have been on a rip, because we have the ceasefire. So thankfully, this doesn't look like it's going to turn into anything that is going to be long-term. Hopefully, the ceasefire holds. We're going to meet with Iran in the coming weeks, and we'll see what comes from that. So this from the BBC. CIA says intelligence indicates Iran nuclear program severely damaged. So obviously, this is the other side. You got some reporters saying, hey, we didn't really do a whole lot of damage. You got the CIA saying, hey, we actually did. So again, we really don't know just yet. So I guess hopefully we will find out soon on that. And then we also had Jerome Powell, the Federal Reserve Chair, who over the past couple days on Tuesday and Wednesday testified before Congress. So this, according to Reuters, Powell says Fed needs to manage against risk, the tariff inflation. So the big struggle right now, when it comes to President Trump, obviously we know right now that President Trump wants a rate cut, right? He's made that very, very apparent. You have Jerome Powell, who continues to say that, look, we're really not in a position to cut rates right now. We're still waiting to see how tariffs are going to impact things. And so, when we get Jerome Powell testifying on the Hill for a couple days, you expect that you're going to get some good news out of it, some new developments. And really, I got to hand it to him. Jerome Powell stood his ground, and not a whole lot really changed, even though he got obliterated by some Republican congressmen, congresswomen. He really did not change his tone. So this, according to Reuters, the Trump administration's tariff plans may well just cause a one-time jump in prices, but the risk it could cause more persistent inflation is large enough for the central bank to be careful in considering further rate cuts, Federal Reserve Chair Jerome Powell told a U.S. Senate panel on Wednesday. Though economic theory may point to tariffs as a one-off shock to prices, quote, "that is not a law of nature," said Powell, detailing why the central bank wants more information about the ultimate level of tariffs and the way they impact pricing and public expectations about inflation before lowering borrowing costs any further. So he basically said, quote, "if it comes in quickly and it is over and done, then yes, very likely it is a one-time thing. That won't lead to more persistent inflation," Powell said, "but it is a risk we feel as the people who are supposed to keep stable prices. We need to manage that risk. That's all we are doing through holding rates steady for now. The effects of tariffs could be large or small. It is just something you want to approach carefully. If we make a mistake, people will pay the cost for a long time." Fed officials still expect to cut interest rates this year, but the timing is uncertain as officials wait on coming trade deadlines and hope for more certainty about the scope of the tariffs that will be imposed and the ways that rising import levies influence prices and economic growth. So as of right now, we are still expecting a couple rate cuts, it looks like, this year. But, he, like I said, folks, he held his ground, and, it doesn't really appear that all the heat that he got on the Hill over the past couple days is really influencing him. I didn't expect it to, but it was definitely interesting if you got to tune in and listen to any of his testimony there. 2 days of hearings did little to shift expectations around Fed policy, with investors still anticipating 2 rate cuts this year, but it did highlight the persistent rift between the Fed chair and President Donald Trump, who wants the Fed to cut rates immediately. Republican lawmakers in the House on Tuesday and in the Senate Banking Committee on Wednesday pressed the Fed chair on why he seems reluctant to do so, even though recent inflation data has been more moderate than expected. The tone at times contrasted with Powell's generally congenial relationship with Republican and most Democratic lawmakers during his 7 years as chair. So you had some Republican senators, Congress individuals that were essentially berating Powell. Hey, why aren't you cutting rates? And at certain points today, on Wednesday, we had some senators that were essentially accusing Jerome Powell of, not lowering interest rates due to just simply not liking tariffs, not liking the political stance of the current administration. So you had some soft accusations being thrown out there. But look, as of right now, nothing's really changed. I've heard some hints that we may be getting a July cut. I would bet more so on a September cut, though. And that kind of leads me into economic data that is still yet to come out this week, folks. Keep in mind that on Friday, we are going to get PCE, personal consumption expenditure, that will be coming out, and that is the Fed's preferred inflation gauge. So you got to believe that Jerome Powell is going to be facing some major heat if that PCE on Friday comes in softer than expected, because that'll just be another indication that, the hard data is coming in favorable for a rate cut. And so, if we get a soft PCE report on Friday, that could very well put the Fed in enough of a position to make a rate cut in July. But again, I think Jerome Powell wants to wait and see, what's going to happen with tariffs. I think that's obviously, he's made it very apparent at this point that tariffs are the main concern. So, and then lastly, I know we covered this on the last episode. If you haven't been paying attention, there are a couple of stocks right now in the space that are ripping. You got Coinbase. You got CRCL is another one that has just been on a tear. And so if you haven't been paying attention, CRCL, that is a stock that has recently IPO'd back in June. And that one in particular has really been coming off selling. A lot of selling pressure has been happening in that particular crypto ticker over the past couple days. And so, as of right now, Coinbase seems to be the play. If you are looking into anything off of that stable coin legislation that the House passed. So, right now, that's kind of where we stand. As far as what's coming up next, keep in mind that we are doing an interview with another seasoned trader, folks. So definitely keep an eye out for that. That'll be coming soon. Make sure to share with a friend, drop a comment. Let me know what you're paying attention to. Make sure to like, subscribe, and follow wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.